Please join us. Thank you.
Thanks, Dominic. Thanks, Bill. Thanks to the Paydirt team for the opportunity to present today. And thanks to the people in the room for hanging around long enough for the last session. We do a lot of work in Kambalda. There's a big historical database. There's historical estimates and exploration targets. So when we do put things out, there's often extra compliance statements and competent person statements at the end. So I encourage people who are interested to read those, as well as the standard disclaimer there. So we listed in June of this year, raised $15 million. Quick corporate snapshot, not many shares on issue, 140 million. The largest shareholder is St Ives, which is a subsidiary of Goldfields, who are the operator of the St Ives gold mine. They got their shares by virtue of the fact that having earned into 51% of these assets as a private vehicle, as a private entity previously called ACH Nickel, we acquired the other 49% of the project by issuing those shares to Goldfields. And by virtue of that, they became our largest shareholder at just under 32%. Register is very tightly held. The top 20 hold 77%. That's also by virtue of the fact that the founders and the shareholders of the original private entity hold a similar level of shares to St Ives. But we did issue 50 million shares and raise $15 million in June. We've been pretty well. We've come back off the peaks of about 70 cents. Market cap's about $60 million, $14 million at the end of June, and we've spent a bit of that in this last quarter. And we trade reasonable volumes. They're not fantastic, 200,000 to 300,000 shares a day, but importantly, we actually have had 50% of the shares that were issued at IPO change hands in the last 3 or 4 months. So there are opportunities for people who are interested in the story to get in. It's a small company with a small management and board, but very requisitely experienced. We cover a range of different disciplines. Liam Twigger's well known to most of the industry, corporate advisory, transactional asset sales, obviously just sold or merged his business, PCF Capital, with Argonaut and become the deputy chair there. Ian Junk's also reasonably well known. He's got a reputation for restarting nickel mines, which is obviously an important part of DNA for Lunnon moving forward. And Ashley McDonald is Goldfields nominee. All of that board have had over 20 years experience directly on these assets in Kambalda through one way, shape or form. On the executive side, myself and Aaron Whirl, I landed in Kambalda in 1987 as a young geo straight off the boat from England. Some way, shape or form, again, I've been there pretty well the entirety of my professional life. And Aaron was picked up from the airport by me in 1996 as a graduate for WMC. We both got sold with the assets to Goldfields in the transaction in 2001. And that's pertinent because we got a deep knowledge of the project. We understand where the project sits and its history. And that's a really important leverage for shareholders in terms of trying to extract value from that project moving forward. So Kambalda, if you were going to be spend a long portion of your professional career like Aaron and I have done, centred on an asset, what better place to be than Kambalda? For both gold and nickel, it's globally significant. As David Southern said this morning, the metal endowment has seen over 1.6 million tonnes of nickel metal mined from the district, and on the gold front, it must be approaching 15 million ounces now from both WMC and Goldfields. Lunnon has got 2 nickel mines that produced just over 90,000 nickel tonnes in the 70s, 80s, and were shut in the 90s. And that's a key fact. Those mines were shut well before the tactical decision by WMC Resources to exit their ownership of nickel mines in the Kambalda district. So when they sold those assets in 2000, 2001 to the Mincors, the Independences and the Panoramics that Dominic was alluding to with that forward projection of our share price. Thanks, Dominic. These 2 mines did not see that opportunity. This belt, this nickel belt, and the nickel opportunity that we're presenting today has effectively been lying fallow inside a gold corporate for the last 20 years. We think there's multiple opportunities, and just for reference there is the production by both Foster and Jan Shaft. Just on the insert map there, you can see where we sit. We're on the south side of Lake Lefroy. The more famous or the more well-known mines that have been in those ASX juniors from 2000 2001 sit on the north shore of Lake Lefroy. And then to our south, I think Peter Harold mentioned in his talk that Black Mountain have sold 50% of Lanfranchi today to Tembo Capital. That sits to our immediate south. So we're right in the heart of the Kambalda district. The 2 mines, that's a perspective view of Foster. Our resources of 39,000 nickel tonnes sit at Foster currently, and that's all work that we did pre-IPO as a private entity. They're all accessible off the Foster decline, which is currently shut and requires dewatering, but it did produce 60,000 nickel tonnes. And in its day, it was a significant baseload feed for the Kambalda concentrator, producing between 25 and 30% of the mill feed to that Kambalda concentrator for 3 or 4 years in a row. On the right, Jan Shaft was actually shut in '86, and the WMC then built the then new St Ives gold mill on top of that infrastructure, using a lot of the concrete and the mine workshops for the mill workshops at the new gold plant as it was in '87. And I know that because I was there. That shut, it was at a relatively deep depth when it shut, of 500 metres. But as you can see from assets like Otter Joanne, who were at a similar depth at the same time, Otter Joanne went on to 1,300 metres. So we think that system is open and the contact's not particularly well drilled. So that's Foster Jan. They're the producing mines. Where we started our drilling, and we started drilling at the end of July with RC and then added a diamond rig in August, we focused on East Cooee, which sits around the fold nose, what's called the Cooee anticline. It's a separate trough system. It's emerging as a brand new focus for us. We always knew it was prospective. WMC did a fair amount of drilling there, but really only clipped the edges of what we think are multiple sources of nickel on that side of the fold nose. I'll just draw your attention to the small gold pit up in that right-hand corner that sits above the top East Cooee arrow. That's an old West Ido gold pit. It sits 400 metres from some of the information I'll show you. So it's readily accessible in the future as and when we develop this new system. And we've had some good success just recently. Put these announcements out last week on the hanging wall position, broad, modest grade, but importantly, significant high-grade massive sulphides sitting within those broad zones. And I'll show you a section of that in a minute. And on the trough position, on East Trough, which is a more of an advanced prospect, whereas East Cooee is a resource drill-out potential. East Trough, importantly, we've been able to confirm nickel sulphides that WMC drilled in diamond drilling, and we had a hit of 2 metres at 5.07%, sitting on what we think is the flank of the trough, and we need to do downhole EM to assess proximal sources of nickel sulphides near to that hit. And it's another 130 metres from the next WMC hole down plunge. So just remember where that open pit sits. This is a perspective view looking to the northwest. I've got a couple of sighter sections there to show you where the 2 sections on the subsequent slide sit. We'll be looking at a section through East Trough, which is a trough channel position where we think there's an opportunity for nickel sulphides, and on the right, hanging wall surfaces, which is a little bit simpler, a little bit more planar, and a little bit more straightforward from a drilling perspective. So I might pop back to this slide after the next slide. So on the left is East Trough. The drill hole we announced last week, 2 metres at 5.07%, sits about 300 metres down. The drilling above that position, the contact was relatively planar and modest grade. It actually runs into the oxide profile, but down dip from our hole Eco RC05, the 2 metres at 5.07. Essentially, we've got 700 metres of open trough with only 2 lines of drilling from WMC days, 1 series of a mother and daughter holes that clip the trough, and then a further 300 metres down. Again, we believe from our interpretation that WMC drill hole, which I can't read from here, down at 675 metres down plunge, only just clip the trough. So the program here is deep diamond. It's downhole EM. It's to follow up then with off-hole plates and slowly work our way down that trough. But on the right, the East Cooee hanging wall position, it's a far more simple proposition. Again, we're coming in inside WMC drill holes. We're hitting broad, modest grade, 9 metres at 1.66%, but within it, again, very good grade, 1 metre at 7.4%. And as I say, relatively planar. We've got the downhole information back from that, and we'll be processing that, hoping that there's a correlation between those high grades and that massive sulphide and the downhole EM place, if present. So this is emerging as a new system. It's going to be a strong focus. It's relatively shallow. As I highlighted, that open pit's only 400 metres away at a grade of 1 in 7 from the edge of that pit to the top of that East Cooee hanging wall section. So we've got multiple sources of nickel able to be drilled out pretty quickly and advanced along. So this will run in parallel to our focus at Foster. Foster mine itself, as I said previously, is host to the 39,000 nickel tonnes that we took to the IPO. All of that work, all of the information and the effort that went into that 39,000 tonnes was accessing the historical WMC core. So we didn't drill a single hole into the inventory. We didn't need to because the quality of the WMC data was excellent, and we've demonstrated a process hand in hand with our consultants Cube to show that we can resample, recut, insert standards and blanks into that historical data and demonstrate that it's capable of sitting underneath a compliant JORC 2012 resource. There's a long section there today. Counterintuitively, I put an announcement out this morning about a gold discovery or a gold hit. That was actually nickel drilling. The interplay between gold and nickel at Kambalda is obviously well known. We've suspected for a long time that the gold structures at Foster play a part in the distribution and the shuffling of the nickel contact, and potentially played a part in the termination of some of the more economic mineralisation in Foster mine itself. When we drilled into a gap to develop some downhole EM platforms with those deep diamond holes, and there's in green on that long section of the two pierce points, the diamond holes. We also went through a gold structure higher up in the stratigraphy. We followed up and drilled 3 other holes that have also hit the same structure. So we've got a gold structure, modest grade, currently 1.5 grams a tonne. We did report today that it had visible gold in that structure. And it clearly, when you project it down now, we've got enough points of intersection. We can see its effect and interplay where it runs into the nickel mine. And it's no coincidence. Believe in coincidences. When we line those drill holes up and we project that structure down dip, it actually does terminate the end of what was the most economic mineralisation at Foster. That nickel hasn't gone away. We believe it's been shuffled by those gold structures, which are obviously younger and later than the nickel mineralisation. So that interplay with gold and that understanding of the gold structure that's come from our time with WMC and Goldfields is a key way of us vectoring in and trying to really maximise our bang for buck with our deep drilling at Foster mine. There's 3 pathways to success at Foster. There's the surface drilling I've mentioned and the RC and the diamond. There's the historical drill core program, and all of this work then generates targets for when we eventually dewater the mine and move underground. So we've hired a dedicated resource, which is not that easy in this market to get a good quality geologist. His name's Ali. She's joined us from Northern Star Saris, and she's excellent. We're really blessed to have her. Her sole focus is to continue the work that Aaron has done pre-IPO to access that historical drill core. There's 350 kilometres of diamond core from the WMC days that sits in the Kambalda core yard. When I was in charge of the Kambalda core yard, it was very neat and tidy. Unfortunately, over the years, it's not quite so neat and tidy. There's a few trees growing up in between the core racks that we didn't used to let happen in the old days. So it's not easy finding core. When you find it, it's often not in a great stage or a great state. But we've now developed a very simple process to access maybe 1 in 10 type holes in the old historical surfaces of the Foster mine, put them through the standard blank, cross-reference the historical geology. We've got all the historical logs scanned, and then reinterpret. But it isn't really a reinterpretation exercise. We've got access to and have digitally registered all the cross-sections, all the level plans, and all the all-reserve long sections for Foster and Jan. As you can see there, it's a significant amount of data. And what we're able to do with our background and our knowledge of the asset, and with Ali on board, it's a really short fuse to move from recutting old core to not reinterpreting. We're actually reproducing the interpretation, all fact-based from WMC days. So all of the work we do moving forward is fundamentally based on, in some cases, 20 or 30 years of geological record. So again, it's a very valuable resource. The geological information is as valuable as the historical drill core. So the goals of that program, as I said, it was previously successfully applied pre-IPO. Foster South on the right there is a cross-section. It's obviously a good cross-section, which is why I've used it. But all of that drill holes, we resampled those holes, we confirmed the interpretation from the WMC days, and that itself formed a 16,000 tonne resource at 4.7% nickel. So great grade, a good source of nickel. And to put that in context, Foster South is a similar size to the bottom of the Silver Swan that Peter Harold showed today at Black Swan. That was 16,000 tonne nickel resource at the base of that mine. This sits 300 metres off the end of the decline, completely unmined. So for Foster, we're going to be working through the historical surfaces. I think there's in the order of magnitude 150 subsurfaces at Foster. All have been drilled. All of that core should be available. And if the results warrant, as we work our way through it, we should be regularly adding to our resource base in addition to the exploration effort. So this is all bonus material. As we add more, it helps the RPEE test, the test you have to put through for reasonable prospects of economic extraction. So the centre of gravity at Foster is going to grow quickly and hopefully, more importantly, grow regularly. And at Jan Shaft, we haven't started with Jan Shaft yet, but in my view, it's pretty shallow. The contact's not well tested, and we will be feeding the information from the interpretation in to a program to drill under Jan Shaft and look for a Jan Deeps position. So this brings us back full circle. Obviously, the main theme here is that these assets missed that last boom. It's through no fault of their own. They happened to be shut at the time. WMC made a tactical exit of mine ownership in Kambalda. They sat lying fallow inside a gold business for 20 years. And based on having worked for both WMC and Goldfields and had great relationships and been in joint venture with Goldfields since 2014, we've managed to tease those assets out of that corporate structure and bring them to the market in June. The reason we think it's a good opportunity, on the left there is a slide that David Southern didn't show today. I can normally rely on the fact that David Southern's going to get in trouble if I get in trouble. But this is the historical information. On the chart on the left is the metal mined by WMC at the point of sale to the junior companies. And then the larger bubble on the right is the amount of metal that was mined, total mine of life to date. So the delta is the amount of metal that WMC left on the table in those assets. So these are great assets to own. In green there, you see the 91,000 nickel tonnes mined from Foster and Jan. So we obviously think we can grow that. And where we sit in the map, you can see, as we say, right in the heart of Kambalda. So we think it's a great place to be. I'm not going to touch on the macro environment. I think there's been enough slides today. Suffice to say, we think it's a great time to be in nickel. The benefit of having assets in Kambalda typically is as and when we do drill nickel sulphides above a 1% reporting cutoff, typically the grade is above 3%. So not only is it a great place to be, the endowment's fantastic. When we do find it, it should feed straight into being a key part of this whole nickel dynamic. And as you can see with the cross ownership and the banner headline there, charging up, it's just a fascinating time. So to be unfettered, we have Goldfields on our register, but other than that, we have no strategics from a corporate ownership basis. We think that's a real strong point. So finishing up the investment proposition, these are our 4 pillars. We're a small team, we're a small company, but with big plans. We think we're really well positioned for the next cycle. The knowledge of the project, the time we spent on the project, we think we're a very short fuse to both take discoveries forward, but also to work on that historical core, those historical estimates, and to keep growing the resource base, both at Foster and hopefully the new centre at East Cooee. I think Kambalda speaks for itself. It's a pretty simple story. We're trying to reproduce the success that companies like Mincor, Independence and Panoramic had, buying assets back in 2001. These assets are just sitting 20 years behind. And maybe this next cycle, it's an even better time to be bringing these assets to the market. We're well funded. We raised $15 million in June. It allows us to test aggressively all the targets we've developed in the pre-IPO period. And as I've said, the backdrop, the macro environment for nickel does appear to be very supportive. So thank you. That's a picture of Jack Lunnon on the right, who the first discovery at Kambalda was named after, by Roy Woodall. The mine was actually called Silver Lake Shafts, but the ore chute was called Lunnon. And then his name was added to the footwall basalt in Kambalda called the Lunnon basalt, which underpins all the nickel discoveries in the district. So we thought it was a fantastic name to give to the company because hopefully that underpins our success moving forward. Thank you very much.